Good morning, traders and investors around the world, and welcome to Tuesday's edition of PremarketInfo.com, where we prepare you for the most important hour of the day, the first hour.
Today's show, we'll talk about the S&P support level in the low 1340s continues to hold, bottoming at 1343 overnight. Alcoa kicked off earnings season last night, and you've had a lot of drugs really moving here. Merck, Lilly, Abbott Labs all making or approaching their 52-week highs. Apple continues its march. Einhorn bullish on CNBC on Apple again this morning. And HFT liquidity concerns during the first 5 minutes of trade.
Well, I guess we can call it a triple bottom,
We really
1343.
can.
Yep. Friday's low 1342 and a quarter. Monday's low 1341. We identified that on our weekly outlook as a key area. Shorts just trying to get out of their positions on any kind of breaks and new longs coming into the market. We're trading a pretty critical level right now. 1350 and a quarter was Monday's Globex high, Friday's interday high, which fell off right from yesterday on Sunday night from the start. This is a whole key area. We stay above 1350. We got a good chance to get back into that 1360 handle. I think coming back on the downside, you come near the close, you're just going to find support is buyers are looking to come into this market.
Yeah, lots of reference points now, all in the mid 1340s here. We've bottomed out there, obviously, the triple bottom that Joel just talked about. But what I do want to highlight, too, we were up there in that 1360 area before the ugly jobs number had the big sell-off. Well, we always say, when it sells off that quick, it can rally that quickly. There's not a heck of a lot above 1355. I think this thing gets above 1355. We're going to see 1360. So market finding support looking better than it did a couple days ago.
Okay, earnings season kicks off with Alcoa.
Wow, I can't contain my excitement here.
I think it's interesting when Bill Griffith was on yesterday, and he goes, "We're going to have Claes Clownfeld on right after the numbers are released, even before he talks to analysts." I feel like tweeting out, because no one's covering the stock. No one wants to talk to him. Who's covering Alcoa?
Yeah, let's just look out at the monthlies on this thing. This thing used to be a $42 stock. We have been just obviously got destroyed during the financial crisis. Rallied a bit the last few years, but now it's right back down here again. The stock just has no interest whatsoever. Was a lackluster event. I think it popped 10 or 15 cents off the earnings report. Pulled back a bit, just trading up 8 cents right now. Hard to get excited about this. If you bought this at $40 4 or 5 years ago, you couldn't care less that it had earnings. You're down significantly on the stock. I don't see it obviously trading there, maybe never again. But if you're short-term traders that like to trade the low-price stocks, this $9 area remains critical resistance. You almost got like a triple top thing going on there from June. But hard to say. I really, this stock doesn't interest me either.
That $9 level that you mentioned, 897 was the initial pop in the pre-market. You did get a drop also at that down to 865. Now really consolidating in this 880 to 885 area. Just if any of our traders are out there and they're trading this stock, keep an eye on here on 877 and 879. We'll call it 878. Those were the highs from the last 2 days. Now that we're trading above that in the pre-market, that should act as support. That also coincides with some highs that we had back earlier in the month. So keep an eye on that 880 level on Alcoa, and if you can wait for it to get to $9, it might be another day or two.
Lots of drugs have been moving here, and I just want to highlight a few of these because these stocks are marching here. Take a look at a chart of Merck. That thing has been marching for the entire month of June. It has continued now for the first half of July, trading up here a little bit again this morning, 42.20. Just quietly continues to break out. What a move here. It's starting to, obviously, these stocks have been dogs for years, but they are starting to come back around, these drug stocks here. Yeah, this huge down move. We go back to 2008, obviously, the stock was at $60. bottomed in 2009, but now we are starting to move up here. If you look closely, the last month's been an incredible move for Merck, because these are higher dividend, usually lower
Yep.
beta stocks, but they aren't lately because you've got Merck here. What do you think, Joel?
Well, if you go back to Merck, okay, 42.24 was the high in April of 2008.
Okay.
So that's how long it's taken the stock to get back to that level. I just have to respect that 42.24 area. Not, it was a high. Above that, you have a really opens up to the 45.73 level, but these things just kind of march, so I don't see it going to 45.73 today. Keep an eye on yesterday's range, pretty big range for this stock. 42.26 was the high, bumping up against that in the pre-market, so look for another leg up in Merck if we can clear that level. Coming back on the downside, the close at 42.13 should be minor support, and you'll probably get some bids starting to stack up at that $42 level. But I think it's the dividend.
It
I think
is.
it's the dividend with a chance of capital appreciation.
Yep, I think you're seeing the same thing in stocks like Abbott Labs. It's the same thing. It's got an attractive dividend, and money is looking for a home. Interest rates aren't going up anytime soon. We know this, and money is looking for a home here, and it's finding it in these higher dividend, lower beta stocks. I mean, we've talked about AT&T for a long time, but the drugs are really starting to catch fire here. Look at Abbott Labs. Just for the last 4 months, stock was at $55 back in February. It's at 65 now. This is an awesome move for a stock that yields over 3%. 65, 61, and stock has been taking off. I think it might run to a little bit of resistance here just off the hop. I do see some selling pressure near the close, 65, 63. So could have trouble, but once it starts taking that out, a price starts to talk about the 66 level. Just keeps marching higher here, Joel.
Yeah, 65.63 was yesterday's high, trading above that in the pre-market. Have to use that as support now, as well as the close being right at that area too. Below that, you got to air in this thing just because it's just been going straight up.
Lilly is another one. It hasn't quite made a new 52-week high on its move, but it is approaching it. The 52-week high made 4 days ago there at 43.31. So if it gets above this 43 area, maybe it can make a new 52-week high today. But the stock has been marching as well.
Okay, and I haven't been able to put this together. Maybe you can help me. I mean, this is all coinciding with the passage of Obamacare, and so you have Obamacare coming in, and then you also have the speculation of the election. Because if Romney comes in, and correct me if I'm wrong, I know this is American politics, might be a little difficult for you, but isn't he gonna have his own master health plan? Isn't he gonna undo everything that's been done in the prior administration?
Yeah, but do you think he can even get in?
Everybody on CNBC does.
Yeah, I personally think Obama's going to win. I don't think that's going to happen, but hard to say, obviously, election results. So I don't know what my take is there, but I will tell you just from the technicals here that these drugs, for whatever reason, are marching. You can put whatever fundamental reason you want behind them, but the bottom line is that these things are in favor right now, whether it's the drug, whether it's the coming election. Hard to say, but for some reason these stocks are coming into favor, and I think it's tied more to the low interest rates. Interest rates are they ever going to go up? I can't see how they could possibly raise interest rates. You've got a U.S. deficit of, what is it now, $13 trillion? How can you possibly raise interest rates? You can't even service the interest payments if you start raising interest rates on that deficit. So I just can't see how the U.S. Fed can raise interest rates ever. So to any substantial amount, anyways. So we're never gonna. I don't think we're ever gonna see these 8-10% rates here again. Everybody knows this, so they're putting their money in stocks that have good yields. Yield is attractive.
Is there any size of 43 in Lily?
I don't see anything there, but there's probably something starting there just because it did top out there yesterday at 42.99. Whenever we see a high of 42.99, it makes us think that the high frequency traders are leaning on some size seller at 43. We can just look at the yesterday's chart just to see it. And it did pop up there a couple of times, so there probably is something kicking around there hidden at 43 that the high frequency guys are leaning on. So if it gets above 43, then maybe it makes a march for that 43.31. But again, keep in mind the high frequency traders lean on everything. They were leaning on me. Let's just talk about this trade yesterday. I'm going to Johnson and Johnson yesterday here. Here I was trying to make a trade in Johnson and Johnson. I had offered the stock at 67.95. So, and I offered this before the market even opened. Right in the opening couple of minutes, runs right up to 67.94. Trades right in front of my size. I've offered 800 shares there, so it wasn't a huge order. Offered 800 shares there. Don't get done. Remember I was talking with you. What did you say to me there, Joel?
I said you're trading too big.
Yeah, I'm trading too big. 800 shares of Johnson and Johnson is too big. You know what? You're right. The funny thing is, you're exactly right. That is the whole issue here, is that all these high frequency traders trade in 100, 200 lots now. Everything, look at the trades going by. 100, 100, 100. It's all 100, 200, 300. You start trading off the bat in 800 share, 1,000 share lots. Now midday, no problem. You can trade Johnson & Johnson midday. There's lots of liquidity at noon. It's slow. Lots of liquidity. You can trade Johnson & Johnson probably in 2,000 share lots. But in the first 5 or 10 minutes of trade, if you're trading any stock bigger than 500 shares, you get leaned on. They basically run to the spot where your order is and they lean on you because there's no liquidity. There's no liquidity in anything in the first 5 minutes. The high frequency traders have sucked it all out. They've eliminated all these human market makers. They're all gone now for the most part. So it's all algorithmic computer systems. And there's risk in the first 3 or 4 minutes. And they don't want to trade when there's risk. So they just don't provide liquidity during that time. And that's a time where you kind of need it because you're trying to figure out where the prices are going. So we used to have human market makers sitting there saying, look, I'll sell this thing, I'll buy this thing. But there's just no human market makers left.
Just to give a little, I mean, we talked about specific trades and specific levels. If you could just, go a little bit more in depth there. Because there wasn't 68 was a number. It had busted through there a few times. Yeah. 68.15 being the 52-week high. Were you going to let that thing? I mean, were you kind of leaning on the 68 again, thinking that someone was going to come back and take another shot at that level?
Yeah, I just think if you look at the chart here, we've topped out there 3 or 4 days. We did top out above at 68.12, 68.15, but even again yesterday I was right with the trade. But I just think this whole 68 level has been pretty big resistance. So from a technical perspective, I've just had the opinion that 68 might hold again, which it did. So I was figuring, let's try a short there and see what happens. Obviously, 1, 2, 3 times. It did trade up above that after. I actually did end up getting short later on in the day. But right off the hop, I could have had that trade 67.94. If the high frequency guys aren't leaning on my order, I could have made a quick 15 or 20 cents. But in the first 5 minutes, if you've got anything substantial size, you just don't get filled. So it's a sad market when 800 shares of Johnson & Johnson is too large of an order to be executed on.
And what are you going to cover above 68?
Yeah, probably if it started, I might have given it to the 52-week high. I'm not a little high-frequency scalper. I can give the trade a little bit, but probably if it broke up above 68, maybe I would have covered. Maybe I would have put a little bit more on above that 68 if it got above that 52-week high. But the point of it wasn't really the reason behind it. The point was that I couldn't be executed because I was trading at 800 share lots, which was too big for the first 5 minutes of trade. And if you're trading out there and on these equities in size of 1,000 shares or 2,000 shares, you're way too big for this market. Midday, fine. But during the first 5 or 10 minutes of trade, very, very difficult to get executed on an order of that size.
And that's when things move. That's when you want to have 1,000, 2,000 shares.
Yeah, exactly. That's where you can make some money is in the first 5, 10. I mean, at noon, what moves? The stocks just sit there and they pick their nose. There's just nothing going on. Traders aren't trading at that time. You just have bots trading with other bots. From basically 11 o'clock till 3 o'clock in the afternoon. It's just computer versus computer algorithms trying to game other algorithms. There's really nothing happening. It's thick, it's boring trade, nothing happens. All of your moves happen overnight because there's no liquidity liquidity overnight, and that's when they can move the prices the most. So it's just the market structure has so many holes, and I know we've went on a pretty good rant here, so we should probably stop the rant, or we're never going to talk about anything else. But I did do a little article on it. You can go and just it's on the blog there if you want to see the little piece I wrote there on Johnson and Johnson. Let's move on here. Let's move on to happier things because I'm wound up. Apple is moving again here this morning. It's trading up another $4. This stock is just marching. Einhorn was on CNBC this morning here, giving Apple, saying his quote was, "I believe Apple's still substantially undervalued." That's David Einhorn. He's a market mover. That's giving Apple a pop here again this morning. This stock is marching. Honestly, I know I've been running on. I'm just like a run-on sentence here. I've been running on, but I honestly think this stock could make a new 52-week high before its earnings report, and I think it's 9 days.
I just went and got a cup of coffee. Can I say something now?
You just went and got a cup of coffee. Go. What's your take?
And an egg McMuffin.
Egg
No, I
McMuffin.
was gonna say I don't say we rarely agree, but we both kind of been on this stock here, just kind of been drifting up over 600. Identified that double bottom from Friday and Monday. But the only thing I want to alert traders to is the 618 level was a high on April 25th. That was the euphoria after the last earnings season. We are approaching earnings season again. 618.07 is the high in the pre-market, so that's a critical level. Not only that, but the April 18th high was 620 and a quarter. It could easily blow through these levels, but boy, a long-term player, people that have been dipping under this thing, it's been almost a 100-point rally after getting to 528 and change. It's a nice move. Would not be surprised to see some profit taking up at these levels. A stock that kind of on the opposite end of the spectrum is IBM. IBM continued its decline yesterday, taking out Friday's low, going a little bit lower, just sitting above basically the low of the move here at 187. You think it's time to try a low risk long here?
Man, hard to say. We held yesterday because it started to sell off. I know you were saying it to me right in the morning there, like, look at IBM, it's starting to break down again, which it started to do just after the open. Did find some support in that 188 area. I think the low yesterday, 188 or 188.01 or 188.05, yeah. So it did find some support, started to rally back a bit in the afternoon, but with these other tech stocks marching, this stock chart is still just ugly here. So I don't know. I'm having a hard time to be a buyer in this stock. I mean, you have a reference point now. Maybe on a pullback, you say, okay, well, bottom 188 yesterday. Maybe if it gets back in the 188 handle, I'll try it. If it cuts through there, I'll get out. As long as you have a reference point, I think you're okay, but I'm just not in love with this one. I'd rather buy stocks when they're going up as opposed to trying to pick bottoms.
Okay, and for you range traders out there, Microsoft seems to be in a little bit of a range here. If you take out that one day where it dipped down to 29.42, you look going back to June 26, you've been in like a 30 to 31 range. Yeah, we dipped down to 29.78 yesterday, but this thing 30 is just starting to be a number in people's head. We're trading up 15 cents in the pre-market. Don't know if it's quite ready to go yet, and we all know where it's going to stop on the upside. 30.70 to 30.79. You had 3 consecutive highs here. So for rangetraders.com, we're looking at 30 to 31 in Microsoft. Just want to point out 2 other stocks in the Big Ten. Procter & Gamble, we talked about those 5 days of consolidation, and lo and behold, it did break out of those highs, got a little run up to 61.80, trying to fill some of these gaps. Talked about it in the weekly outlook. Here you're buying a stock after a major decline. It's paying over 3.5%. Once again, we're getting back to this dividend theme. Just trying to get back up and test that gap level from, I guess it's another earnings warning.
I think this 62 level, I think it might play with it today. I do see some institutional selling pressure up at 62. Technically, it looks like a level. Looks like from an order flow perspective, it's a level. So I would expect those high frequency guys to try to make this thing top out in the 61.90s today. Gets above 62, then the high frequency guys will cover, and the stock could start to move higher. So I think that's going to be your first resistance point.
Okay, and just to close out the show, just a steady stock to be in. We've talked about it a lot. Wells Fargo held the close yesterday, even during the decline. 33.05 was Friday's close, made a low at 33.04. I got up to 33.57 before pulling back. We had that crucial level up at 33.72 to
Yep.
33.73, which is only less than a buck from the 52-week high. I mean, you can't ask much more from a stock that to sell off under 30 bucks and come back like that. And once again, we'll get back to that dividend theme. I believe the stock is yielding 2.5%, 3%.
Yeah, I don't have it in front of me, but I know it's one of the better yielders. So yeah, it's the same thing when you find stability, and Wells Fargo has had some stability. I know you can say, oh well, JP Morgan yields. Well, the thing is though, Wells Fargo has stability. They don't have whale trades happening here. So I think it's the same thing. I think stocks that have 3, 4, 5% dividends and have lower betas are attractive for income investors right now because they don't want they don't want the volatility of the market, yet they still want to get yield somewhere. So I think you have brokers putting investors into stocks like these. It's kind of a scary thought when you think about that. But at the same time, like if you've got your money sitting there parked in a treasury bill 0.5%, some of these vehicles are seen like, why don't I park it in AT&T at 4.5% or 5% instead of parking? Now, I don't suggest to do that. I think that's a terrible idea. If you're scared of the market, it's not the thing to buy any dividend stock. But that's what's happening, I think. So I think you've got brokers putting putting their clients into stocks like these because of the dividends.
Okay, and you just mentioned J.P. Morgan there, and I just wanted to. I know you beat me up here when it made its 30.83 low and got back over 37.03. I just want to point something out to our traders out there, and perhaps more you swing traders. You finally had a recovery off the 30.86 low. You bumped your head up against 37. Basically a 6-point move, and now you pulled halfway back. You pulled back to 34. Now you're going to find out ahead of earnings here whether people really want to be long this issue and watch it go back up to 37, or if the whale trade is still going to swallow up investors.
Yeah, it's got earnings on Friday, so maybe we'll find a little bit more out on Friday. Wells has earnings as well, so it could be an interesting day for the banks on Friday.
Okay, the SPOO's falling off here, 13.49 a quarter, unchanged now, kind of in the middle of the range. Keep an eye on the close. You know where the support is here at 13.43. That's our show for today, folks, and we'll be back with you tomorrow.